Hello everyone, hope you guys are doing well today. Today we are going to begin with our overhead absorption rate, that is also known as OAR. Okay, what is OAR? OAR is basically your rate at which you are recording or absorbing your overhead per unit or per activity level. Now, OAR basically gives us a basis on which we are allocating a cost per unit. Okay. Now, obviously, if we look at a product and its nature of activities, we will be able to identify what can be the basis of application of cost. Okay, right. Now if I say that we have a automated organization where we have heavy intensive machinery, now in that situation we are going to use machine hours as a basis of allocation, because majority of the time the machine is going to be utilized for the product. If we see that there is a labor intensive particular situation, then we're going to absorb our overheads on labor hours, so that every unit that is gone through the process is able to have a allocated OER, right? So overhead absorption rate is basically assigned to production department and absorbed into products using OER, that is on the basis of labor hours or machine hours, and we can decide it based on the type of organization that we are in. So example, that product A has 126,000 of overheads, and we have approximately 14,000 units produced. So overhead absorption rate will be 9 per dollars, 9 units, $9 per unit, right? As per here as well. Now it can be used for hours as well. Now let's say that this particular question told me that we had 126,000 was the overhead. Okay. Now they said we had 5,000 labor hours. If they said that we had 5,000 labor hours, I would have divided it by 5,000. Okay. So what would have been my OER? 000 divided by 5,000. Now this would be 25.2, right? This is my overhead absorption rate. Now, if a person told me that one unit takes 4 labor hours, so for one unit, we have 4 hours, then my overhead absorbed per unit would have been 25.2 into 4, and that would be 100.8. That would be the overhead absorbed per unit. Okay, so this seems a more logical understanding of OER here. Now, with OER, we have a predetermined overhead rate concept. Now, what does this mean? For this, I want to basically tell you something or ask you something, a question, that when do we decide our selling price? The selling price that is decided, when is it decided? Is it decided after the year end, or before the year end, or before even just selling the product, at the time of planning? I would say that it would be time of planning. Obviously, if a customer comes up for me for a pre-made product to be sold to him, I will decide my selling price based on my estimations, based on my plans. I will not say that wait 1 year, after the year end I will decide what is the cost that I have incurred and what can be selling price here, what was the actual overhead. I cannot wait for that. So in this situation, I can say that my overall direct material, direct labor, variable production overheads, fixed production overheads, and overall overheads are all in the name of budgets. That means that at the year end, we are going to have a position where my actual overheads are going to be different than my budgeted overheads. Now, in direct material, direct labor, and variable production overheads, there is a fair less chance that this will happen. But in fixed production overheads, it is a position that is going to happen. Okay, in fixed production overheads, it has been a pattern that the overheads in actual are different from budgets. So when we are discussing, when we are saying that we have a fixed overhead allocated to a product, the fixed overhead is predetermined fixed overhead. By predetermined, we can say before the product has an actual overhead incurred, we have estimated the overhead that would have been applied to a particular product so that we can estimate the selling price. So to make a selling price, we have a budgeted figure there that at the end of the year will be compared to actual, and there will be a difference that we might have overcharged the overhead or we might have undercharged the overhead, right? So this under and overcharging is known as a concept of under over absorption of overheads, and that would be utilized in your marginal absorption statement as well and other concepts as well. It can be used in variance analysis as well. Okay, so let's see the theoretical wordings of it and the formula for it. Now, predetermined overhead absorption rate is calculated at the beginning of the accounting period using budgeted figures. This rate is used to absorb overheads during period as production takes place. The OR has budgeted overheads divided by budgeted activity levels. Okay, now this is predetermined overhead rate. Okay, remember that the activity level could be based on machine hours, labor hours, or unit produced. So that is the standard pattern. The standard activity that we have, the budgeted activity we have, we can use that. The purpose is to include overheads into cost unit consistently and to set product prices and value inventories even before actual results are shown here. Before the actual results are here, we are going to basically determine the prices. Now, the concept of under overhead. Now, at the end of the year, if actual figures differ in most scenarios, it will happen. The from the budget ones, it may result in over absorption when overheads absorbed exceed the actual overheads incurred, or under absorbed when the overheads absorbed is less than actual overheads incurred. Now, what do we mean by that? Let's say we had absorbed 100 rupees per unit as overhead. Okay. Now, in terms of over absorption, what will be the scenario here? The scenario will be that overheads absorbed are more than actual. That means my actual position is that I have 90 per unit as actual overheads. That means I have charged 10 rupees more to my particular product. If my overheads increase, what happens? My profit reduces. Overhead is an expense, right? If my expenses increase, my overall profit will reduce. So in the situation, in the case of over absorption, we are going to have a position where my profits are basically understated here. Okay, so I'm repeating it. If the absorbed cost is higher than the actual cost, we have a over absorption. Absorb means basically the one charge when we have set the selling price. That is why I told you the complete story of selling price. That when we have charged the selling price, it is a different time at the position where the actual overheads have incurred. So the overall incurred actual overheads were lower than what we have assumed. Now in this situation, we have shown our profits at a lower side. Now in the second position, if we have under absorption, this is the position where we have allocated our overheads lower than the actual position. That means our actual overheads come at a point of 110 rupees per unit. We have charged only 100 rupees. In this position, our profit will be overstated because our expenses are understated here. We have not recorded our expenses adequately, so we would require to have a position to rectify the financial statements. So I believe that this concept is clear to everyone that what is under over and what is the position. Okay. Now, one small thing that I will basically tell you very shortly is when we study the formula. See the steps here. First of all, the OER. OER is based on predetermination. So budget overheads divided by budgeted activity level. The second step is that overhead absorbed is equals to OER into actual activity. Now, what are we doing here? What are we doing here? Now, what we are doing here is to be told to you through a story. Okay. Now, let's say you are traveling from your home to the airport, and you assume that the airport is approximately 30 minutes away, or we can say 10 kilometers away. Okay, you say that the airport is 10 kilometers away and the budgeted time is 30 minutes. Okay, so can I reasonably say that my OAR in this situation will be 3 minutes per kilometer? Yes. Is it reasonable? Yes, it is. Now, what happens in the scenario is that you are going on the road and you see there is an accident due to which the road is blocked. So you have to take a divergent here. So you are going for another route here. But now in this situation, I'm changing the color as well. In this situation, what happens is the route that you're taking is actually 15 kilometers. Now the route that you're taking is 15 kilometers. Can I reasonably say that I will now reach my airport at 30 minutes? Can I say that I can reach my airport in 30 minutes? Would it justify my reasoning or estimations? Is it justifiable? Is it reasonable? No, it is not. Absolutely, it is not. So in this scenario, I will say that I need to adjust my budget. Now, in step two, what we are doing is we are adjusting the budget into the actual position, the actual time. So according to this example, now if I'm saying that actually it took me 15 kilometers, so according to my budget, I had 3 minutes per kilometer. So if I'm traveling 15 kilometers, my adjusted budget will be 3 into 15. That means now I will take 45 minutes in total to travel the distance of 15 kilometers instead of 30 kilometers. Now this information is obsolete for me. Now this one is the relevant one out. Okay. Once I have done this, now what I will do is I will compare it with actual. Now we will compare it with actual. If absorbed is greater than actual, then overhead over absorption. That means this is compared to the actual. In actual, if I say that we are taking 50 minutes, in actual, if we take 50 minutes, that means we have under absorbed. That means our actual was greater than absorbed. So this is under. And if we take 40 minutes, this will be over absorption because I have absorbed more than my actual. This will be the complete scenario of under and over absorption. Many people get confused in step two. Why are we doing it? We need to make it a level playing field for us to go and check the particular transactions. Okay. Now, a small example. Let's calculate it together. Now, budgeted overheads were 80,000. Budget labor hours were 20,000. So let's calculate the OAR. For OAR, we are having a formula of 80,000 divided by 20,000. So we are having 4 as our OAR. Okay. Now 4 is our OAR here. Now we have actual labor hours, that is 22,000. So step 2, we have our adjusted budget. That says 4 into 22,000 should be my new OAR. That is basically 88,000, I suppose. Just calculating it for confirmation. Yes, 88,000. Now I will compare it with the actual position. The actual position says that we have 90,000 as my cost. If I have 90,000 as my cost, that means basically my budget was lower than my actual position. That means it is a position of what? It is a position of under absorption. By how much? By how much I will see is it is 2,000 under. Here on this, that in this position I had a particular calculation where my overall position showed me that my overall overhead that has incurred is 88,000. If that my budget was 88,000 and my actual was 90,000, that means I have underestimated my expenses by 2,000. Okay, so I believe this example was clear to you guys and you are able to grasp the concept. Now we have one more example. I would recommend you guys to pause the video, solve the question, and we'll solve it again together. Okay, now let's solve it together. I believe that you guys have done it and you have done it absolutely correct. Now let's see. We have the budgeted positions again, and we have been given the machine hours this time. So 148 OER will be 148,750 divided by my 85,000, that is machine hours. And now in this position, my OER will be 17.5, that is my OER here. Now my actual position is coming to be 7,928 hours that were actually worked. So let's multiply it. So that is the adjusted budget, 17.5 multiplied by 7,928. That gives me 138,740. 138,740. Now this is the balance that I'm getting. In actual, I am having 146,200 as my overhead, right? So in this position, if I go for my adjustments, 146,200, I can easily see that my position is 7,460 under. I have adjusted my budget, but my budget is understated in nature. I should add 7,460 as my expenses in my income statements. Okay. Now, working backwards. Now, what is working backwards means basically sometimes you are given the actual overheads and the under over absorbed amount and asked to calculate the budgeted overheads absorbed. Now, if actual overheads is greater than absorbed, under absorption, if absorbed is greater than actual over absorbed, I'm writing this again for the specific reason that many people get confused about it. So let's solve this question. Now, what they're telling us is that actual overheads are 16,700. Now, actual labor cost or labor hours are 4,050. Under absorption is 1,310, and budgeted labor hours are 4,220. Now, they have not given us the overheads yet. In this question, they have not given us the overheads here. They have given us the actual hours and the budgeted hours, and they are asking us to calculate the overheads that were budgeted in nature. So let's see. Now, what is the situation here? They are telling us that we had a under absorption. Under absorption means in the situation that our absorbed overheads were lower than my actual overheads. So should I subtract my under absorption amount from my actual to get to a position that is relevant? Yes, I can. So first of all, I will do what? I will basically have 16700 minus 1310. This will give me my adjusted budgeted overhead, that is 15390, right? This is my adjusted budget. Now I need to get to my actual budget that I had originally. So to do that, I need to divide it by my actual units, right? To get my OER here. So I'm working backwards here. Okay, my OER is coming to be 3.8. Now if I multiply this by my budgeted hours, that will be 3.8 multiplied by 4,200. This will give me 15960. 15960. This was my actual budget that I had in my records. Okay, so this will be easier for me to basically calculate and have a good position upon. Okay, now we have one last question that has a full comparison, a detailed question. Now I want you guys again to pause the video, solve it together, and then we'll discuss it. Okay, now I believe that you have solved it again. Now let's solve it together. Budget overheads are 100,000, actual overheads are 116,000, and the same situation again that we were doing. So OAR first step is 100,000. divided by what are my budgeted machine hours. My budgeted machine hours are present to be 40,000, right? So my OR will be 25 or 2.5, sorry. If I'm having the OR at 2.5, that means my adjusted budget will be 2.5 into my actual activity, that is 42,000. So 42,000 will give me 105,000. That is my adjusted budget. My actual overheads are my actual overheads are 116,000. That means I'm again having an under position, or by how much? By approximately 11,000. So this is the position that I'm having in under over absorption. So I believe that under over absorption is clear to you guys now. Now the steps, the criteria is working backwards or forward. It's not an issue with you guys. Now key things to remember that use budgeted values to calculate predetermined rate, compare overheads absorbed to actual overheads incurred. Under absorption means insufficient overheads were recovered. Over absorption means too much overheads were recovered. Now, if you are having an under absorption, that means we add expenses. Now, if you are having a over absorption, we less expenses. Now, remember this rule. Less expenses means add income or reduce expenses. Add expenses means add overhead expense, and you can record it easily. These adjustments affect profit reporting, inventory valuation. Okay, it affects profit reporting and inventory valuation both in nature. So I've given you the graphs as well here. You can easily see the graphs and determine the actual adjustments that we have. Not much to do here. If you have the concept of under over absorption, this will be very easy for you guys. And in the next session, we're going to continue with some other topics. Till then, enjoy learning. Goodbye.